Tell me your name and your job title.
So I'm Stephen Yiu. I'm the Chief Investment Officer at the Blue Owl Growth Fund.
Great. And you were presenting at the Investor Summit today. Give us a sense of what your presentation was about.
So I pick a topic that is very close to heart, which is maximizing outperformance as a starting point, but at the same time is going to maximize outperformance with explosive growth opportunities, which is a lot of companies that are in the fund that would have that sort of characteristics, which we think is going to maximize outperformance.
Now, tell me a wee bit more about the Blue Whale Growth Fund. You're very focused. You only have 25 or 30 stocks, is that right?
That's right. So the journey started just over 8 years ago, and we run a high conviction mandate in the global domain. So we only invest into between 25 to 35 companies, on average about 25 to 30. And we do all the research in-house, and this is where we think we can deliver the most alpha or outperformance.
That gives you the edge.
That's right, because firstly, we do all the research in-house, so you have really high conviction, you go through all the primary sources of information. But at the same time, if you happen to get more things right than wrong, then I think your hit rate and also how you translate that hit rate into outperformance is a lot higher than if you're running many more stocks.
Okay, and what are you buying and selling at the moment, and what is your fund performance looking like currently?
Since we started until recently, that I would say that we are in the top 1% of best performing funds in the global domain. So we have analyzed over 14.5% net of all fees, so it puts us in the top 5 best performing funds. But what we have been doing recently, which is quite interesting, is we are still a true believer in how AI is going to change the world, but we have increasingly become a lot more selective. So recently what we did was we exited some major names that have done very well for us, like Microsoft or Meta, but we continue to be a major backer of Nvidia and Broadcom, which we more positive on company that on a receiving end of any spending rather than the AI spenders. So we are very cautious on AI spenders, but we're still a true believer in how AI is going to change the world.
Have you changed sectors? Are you looking at defense in Europe, or have things changed for you?
Yeah, so I would say that defense is one of those areas that we have got exposure to before this year, and we have done very well on the back of our investment in inaugural, for example. It's gone up like just over 80% this year. I would say that in terms of valuation in the defense sector is probably less attractive now, just because it's done so well. And my question would be that they probably would take a bit of time to digest the spending, or how quickly the spending would come into play to the sector, because it always comes with a lag, right? So then the company or the share price anticipates a lot of spending is going to come quicker than later. So we have actually trimmed our holdings. But at the same time, I think we're considering other opportunities, like we got into Uber, which is a very interesting company that we have not invested into before, and it's done very well for us.
Tell us a wee bit more about that company.
So Uber, everyone will be familiar with in terms of the transport company that provide us with the different means of transport. But what's really interesting is there has been a bit of concern about autonomous vehicles, that people would think, okay, over time we don't need drivers anymore, and then Uber would no longer be relevant. But to us, just because they have already got a partnership with Waymo, which is a Google venture in autonomous vehicle, and ultimately we believe that Uber will still be the hub for consumers to connect to if we do have autonomous vehicle. But at the same time, autonomous vehicle is not going to be in every city. I think in London might be more difficult to see, but in some bigger cities in the US might be easier just because of infrastructure. And at the same time, when you look at the Uber Eats, they now have partnership with like Waitrose, John Lewis, and then you can actually get your items delivered to you quicker than if you ordered online with this company themselves. So it's actually very interesting. So there's a lot of white spaces that they're going into that makes the company very interesting.
Do you see Uber as a long-term hold?
I hope so. Obviously, I think we have a very high hurdle in terms of how well our company does for us, and we track the investment thesis very closely. So if Uber continue to deliver what we expect them to do, we could be a happy holder for many years to come. And I go back to the point about Microsoft that I mentioned earlier, that we sold out recently, that we have owned and held onto Microsoft for 7.5 years. So we have been a happy shareholder in Microsoft, and hopefully we could be a happy shareholder in Uber too.
Indeed. Stephen Yiu, CEO, Blue Whale Growth Fund, thank you so much for supporting the Investor Summit, and thank you for being with us today. Thank you.